Let's examine problem 128, net capital spending. Let's actually take a look at the lay of the land. At the start of the chapter, I had said, well, we're very interested in a company's cash flow, particularly their cash flow from assets, which is composed of operating cash flow, which we tackled in problem 1, capital spending or net capital spending, which we're tackling now, and in problem 3, we'll look at change in working capital. So we are here. This is what we're working on. And so it's just a type of cash flow a company may have. They have to buy assets. So let's contemplate what that looks like in terms of the math. When I'm solving these, I like to tell a story. I'll do it the slow way, which is the storytelling way, and then I'll do it the fast way, which is there's a quick, easy formula. But I actually wouldn't memorize the formula. I would just know the story. So we're interested in this account on the balance sheet. Let me read the question. It says a comparative balance sheet for Sleepy Company is shown below. Here we have our balance sheet, which summarizes the assets. That's the stuff of value that the company owns. Liabilities, that's what they owe. And the equity is what's left over. That's the shareholders' piece of the pie. We're interested, though, just in this line in this question. A review of the company's income statement showed depreciation of $30,000, and it says, what is the net capital spending? Okay, so I like to tell the story of this line item. Here's the story. I had $180,000 in assets last year. This year I had depreciation of 30. So I would think, barring any capital spending, right? If I didn't spend any money, I would have $150,000 in assets. But I don't have $150,000 in assets. I actually have $200,000 in assets at the end of this year. So again, last year, started at 180. I depreciated them by 30. I would expect to end up at 150, but I didn't end up at 150. I ended up in 200. Well, what happened? I must have bought $50,000 in assets. So my net capital spending, I'm answering the question now, is 50. Done. That's the answer. Okay, so that was solving it. I don't even think it's that slow, but that's the way I think of it. When I read textbooks, they often will give a formula here. I don't think the formula is as useful, but maybe it'll be useful for you. So here we go. Here's how you solve it by formula. You say change in fixed assets or net fixed assets. So the change in net fixed assets was plus $20,000, right? It went from 180 to 200. That's plus 20. Plus depreciation. That's the formula. So 20 plus 30 is 50. Okay, so we got it both ways. I think this way makes sense, though. You know, when I think about it, I don't think of the formula. I think about what really happened. And what I would love to really happen, oh, what a segue, is if you like this, hit one of those buttons. All right, thanks for watching. Bye-bye.